But if you have an option between making 8 or 9%, including div distribution and yields on the S&P 500 at a 17 to 18 PE, or getting 2 to 3% on long duration treasuries, I think that's a no-brainer. You're going to stay long equities. And that's my position. I am underweight fixed income big time. I don't care when the Fed stops raising. That's another debate. Do they do 50 basis points? Do they 75? We're going to find that out. They may do 50. The narrative has changed to a soft landing for the first time in decades. Nobody gives credit to the Fed for ever delivering a soft landing because they never do. Maybe because of the backwater of all this printed cash, they have that opportunity to do this. So bottom line is, so I make it very clear, bottom is in. We're going to be flatlining for a while we wait to see what the Fed does. But if we get what I think is going to happen November 8th, Katie, bar the doors. There's two bills right now in front of Congress. And so one is a watered down version of Build Back Better. They're calling it anti-inflation, but everybody knows is a joke. This is very inflationary, but it's a spend over 10 years. So that's one attribute of more printing, which would maintain an inflationary stance and, of course, keep the Fed raising rates, which is not good for equities. And then there's this interesting situation in the chip bill where we're going to spend billions of dollars. It's, again, free money from a helicopter going into the Midwest to try and catch up with what's happened in our lack of ability to manufacture semiconductors. Now, cut it to what it is. It means that management, the Intels of the world, the AMDs, they made a mistake. They moved all their production offshore decades ago. Took the U.S. down from 32% of manufacturing down to less than 10. Now they got to bring it home. We're going to print money to make that happen. That also is inflationary. And you can sell it as something as a defense to the U.S., but basically you're supporting idiot management. That's basically what happened. You're picking a sector. Taxpayers are not getting anything from it other than just to give their tax dollars away to idiot management. And I don't mean disrespectfully, but there's management that can execute and foresees the future, and that's why they're good managers. And then there's idiot managers. So you could say many idiot managers guided manufacturing out. And why I bring this up towards determining the future of the market is politicians damage bull markets. They've never run businesses. They have no idea what they're doing. They're just throwing this stuff out there to raise money. I don't want to be a cynic, but it's a fact. They have no idea. And so they put these crazy policies in place. The more you keep chipping away with stupid policy, the more damage you do long term to your economy. Now, this 15% minimum tax does not help equities. It doesn't. It's just going to have companies contort and try and figure out how to get around it. Bottom line. The IRS, 88,000 more agents, that's just going to hassle small businesses in America. Not a good thing. So bad policy. The whole point is when you have a situation where Washington can move policy, more than 50% of it is bad policy. When you have total gridlock, they can't do anything. They can't damage anything. Listen, it's important to have government for many different services, but not for making economic policy. They're really bad at it. So that's why I point out, once you shut down the policy machine, markets get to move back up. By second quarter 2023, after the midterms, if the House flips, you get the Republicans on this, they're way more pro-crypto. Most of the bill initiatives are coming out of red states, and I don't want to be political. But if you get the House flipping, they'll put that on the agenda. But don't expect every token to be regulated. They're going to focus on the market capitalization and say, here's policy on Bitcoin, here's policy on ETH. I think you want to be long after November 8th. Both sides are supporting this, Dems and Republicans, because it makes the dollar, if you get a U.S. stablecoin policy in place, it makes it the default payment system of the earth. Not the Swiss franc, not the euro, not the British pound, not the Chinese yuan, the U.S. dollar. So this is coming back to the House on the floor in September, and it may be the first piece of legislation that provides the launch ramp for more crypto policy. Now, you know there's a war going on between the SEC and the other regulators, a turf war on crypto, but you can't deny crypto is here to stay. In fact, I believe in the next 10 years, it'll be the 12th sector, the S&P. And I'm trying to make bets all through the continuum of projects. I own everything. I have 32 positions. I don't know which ones are going to work,